Joseph Capurso, who's a currency strategist at Commonwealth Bank of Australia. Joseph, thanks very much for joining us today. When you take a look at the futures and you take a look at the economists we've surveyed, you're looking at 60 to 75% chance the IBA will hike rates by a quarter point. But what's your view?
Look, we think it's going to be a very finely balanced decision by the RBA. On the one hand, they've got clearly a strong domestic economy, but those uncertainties about the Eurozone are starting to creep up. So, look, we think overall they'll probably sit back, wait for another month and raise in June.
And is that why you're calling for the Australian dollar to weaken?
Look, that's part of it. Look, the main story for us is the Fed. We think the Fed is going to start raising rates from around August of this year, and that should push the US dollar up across the board, including the Aussie dollar, with the obvious exception there of the Chinese yuan.
Give me a target for the Aussie dollar. Where do you think it'll go to in the near term?
Look, in the near term, probably in the low 90s, but in a year from now, probably about 87 cents. So it's a fair distance from where it is today.
Absolutely. So parity, even in the short term, off the agenda.
I would think it's definitely off the agenda. I think you need to see a really strong weakening of the US dollar to start talking about parity with the US between the Aussie.
Just casting your eyes to the east, a few hours flight away, the Kiwi, the best performing G10 currency over the past 30 days. It's risen about 3%. Are you still bullish on the Kiwi, or would you decide to chuck in your money at this point?
No, look, we're still pretty bullish New Zealand. New Zealand's in the early stages of recovering from a recession. New Zealand's a lot more exposed to the global economy than Australia is. Exports are 30% of their economy, 20% of ours. So we still see Kiwi creeping up, probably to 73, 74 US cents over the next few months, and that should push Aussie Kiwi lower.
I believe that in terms of commodity currencies, one of your favourites is in fact the loonie, the Canadian dollar, yeah?
Yeah, look, we're still pretty bullish Canadian dollar. We see dollar CAD going down to 97 cents, perhaps even a bit lower. For us, the CAD is a high beta play in the US economy, and the US economy is clearly recovering. Grew, 4 or 5% in the last 6 months. So yeah, we'll be looking for exposures to CAD. Okay,
now let's take a look at the elephant in the room in terms of currency markets at the moment. That is the euro and the Greek debt crisis, which at the moment seems to be heading for at least temporary resolution with this 110 billion euro bailout package agreed by EU members, as long as Greece cuts its budget deficit from 13% to 3% over the next 4 years. I mean, what's the outlook for the euro given this situation?
Look, I think you could see a short-term relief rally in euro up to maybe around 135. But I think the bottom line is the fundamentals of the Eurozone are still pretty poor, particularly when you compare it to the US. Eurozone's most likely to have a double-dip recession of all the major regional economies. So I'd be still short in euro on a medium-term basis. In a year's time, euro's likely to be trading in the low 120, say 123, 124. It's particularly that will happen when the US Fed starts raising rates. The ECB are a long way from raising rates.
That suggests to some extent that you feel the euro's at least not going to fall apart in the short term. I mean, in terms of it's not going to actually come to an end.
No, but when it comes to currency markets, you never rule anything out. Anything is possible. But look, I think that's probably a really long tail risk at this stage.
Okay. I just want to take a look at the pound as well, because we've got the British election coming up, and you're fairly bearish on the pound ahead of that election, and I guess potentially afterwards if there's a hung parliament.
Look, when it comes to this hung parliament debate, other countries have coalition governments. Australia, has in the past. Germany has. So I'm not too hung up about coalition governments and hung parliaments. All the political parties over in the UK know that they've got to take some pretty strong action. And I think the Greek crisis sort of rams home to UK politicians that they need to say the right things and follow that up with good deeds. So I'd probably be fairly bullish the pound once the election's over with. And in fact, yesterday we said that after the RBA meets today, it'd be a good idea to start taking short Aussie pound positions.
Oh, OK. All right. Short Aussie pound after the RBA decision. Joseph, thank you very much indeed for that. Joseph Capurso, currency strategist at Commonwealth Bank of Australia.